Welcome to the 1 to 1 Million podcast, your weekly crypto alpha for those who never quit. Today, we're going to be diving into Trump, nonstop buying the dip. What does it mean? We're going to be talking about the Fed. Right now, the market's pricing in 2 cuts. Are we going to get more? Is the market pricing in below what's going to actually happen? Is everyone having this low expectation? And we're going to get a surprise to the upside and kind of my case around that. We're going to be talking about income taxes. And is there a chance that we see income taxes eliminated? That's some of the talk of the town right now. So is that going to happen? And lastly, I'm going to be giving my bull case around liquidity for this year and why I believe very strongly we could see it go higher and kind of just dive into all the details around that and more. Let's dive in. Okay, so right now, maybe the single most important thing to keep an eye on has been the Fed and what they're doing. The markets have been following the Fed ever since December when the Fed came out really hawkish and the markets had a meltdown. They freaked out. Everything sold off because, we were expecting all these rate cuts in 2025. And now the Fed's saying we're only going to get 2 rate cuts in 2025. They're really hawkish. They're worried about inflation coming back. And now, the markets has just been pure depression ever since then, and everyone's trying to figure out what's going to happen next. Now, I am at a disadvantage right now because I'm recording this right before the FOMC meeting, and I don't yet have that information when you're actually watching this tomorrow. So, obviously, a surprise to the upside, like if they came in more dovish, would be really good. If they actually did cut rates, that would be obviously awesome. But that's the expectation. So you get you're like this future wizard watching this episode, so you get to know what already happened. I don't know at the time of this recording. So I'm just going to be speculating, not on what they're going to do, because that'd be kind of stupid, but what they're going to continue to do throughout the year, because this is just one meeting, right? Okay. It doesn't fully matter. I mean, it does matter for the short term, but it doesn't matter for the long term. I want to know what's going to happen in the long term. What should we expect in 2025? Are we only getting 2 cuts? Or are we going to get way more than 2 cuts? And to understand this, you have to understand inflation and the Fed's relationship with inflation. And, are we going to be able to quell inflation and kind of get, disinflation somehow? Or is inflation going to rise up, or spike up, right? Like everyone's expecting with these tariffs and all that kind of stuff. And if we get inflation to spike up, that's bad. That's bad for global liquidity. That's bad for rate cuts. The Fed's not going to give us any of what we want. But if we can get inflation to go down, that's very good for those things, because then the Fed cut rates to their heart's desire. And so I'm going to kind of spell out why I think inflation is going to go down, because I've been listening to a lot of podcasts from Trump's administration, from Trump, Scott Bessent. I've been diving into all the details, trying to figure out, kind of what they're thinking, what they're going to do. I even went back and listened to a bunch of old Trump books to kind of get a little bit of an insight into his mindset. That might seem excessive, but I literally have my entire net worth in crypto, and I'm not wanting to lose it all because I'm being stupid. So I've done a lot of research. I'm trying to get inside the head of this administration. Okay. And this is kind of what I've come out with. This is kind of the picture, the takeaway I have. First off, one thing a lot of people are not talking about is the fact that deregulation is insanely anti-inflationary. Okay. Or de-inflationary. And the way this works is think of regulations as friction towards starting a business, building anything, producing anything, or whatever in the United States. A really easy example of this would be like if you go to build a house in the Bay Area and you're going to have to pay, this $100,000 fee just to build the house because it's do traffic studies and stuff. Maybe you're going to have to pay another $100,000 fee to do an environmental study. Maybe, another $100,000 in permits and licenses. And on top of that, all the people building your house, all the builders, whatever, they're going to have all these fees and permits. They're also having to pay that kind of jack up their prices to build your house. And, just starting out to get this house done, maybe you're already sitting at $300,000, $400,000. Okay. So you're like, oh, I want to build a house. Okay. Just in fees and studies and all this kind of nonsense alone, that's $400,000 of inflated regulation cost going into building that house. Meaning there's no way you could build a house for less than that amount. And that, I'm just kind of throwing out numbers, right? But you get the kind of idea of how, regulations can be super inflationary, right? But on top of that, there's even more to it because the more complexity and the more legal compliance and all this kind of stuff you throw in there, the more you limit competition. Okay, because obviously if there's one guy that produces cars or let's say builds pools. There's one guy that builds pools in your city you live in, right? So anyone that wants a pool built let's say you live in like Arizona somewhere and it's really hot. Everyone wants pools built. Anytime you want a pool built, you can only hire this guy. And because there's only one guy, this guy can charge whatever he wants. He can jack up prices to the moon. There are unlimited clientele. Everyone wants a pool. So this guy just jacks up the prices. His work absolutely sucks, and you have no alternatives. So that's kind of what you get, right? But let's say another guy moves into town. Now you have two guys building pools, and this guy undercuts the second guy. Now the other guy has to either do better work or, like there's now a little bit of competition. Now imagine 1,000 pool guys moving to town, and they're all working. They're all hustling to build you pools. Well, for one, the best pool builders are going to go to the top. The ones that are going to be able to produce it for the cheapest at the best quality are going to go to the top. And because it's competition, you get a deflation in prices and then like an up in quality, right? Okay, so competition introduces, it pushes down prices and it raises up quality. In that same way, when you have all this regulatory like moat around things, making it really difficult legally, to just even get off the ground, you massively reduce competition because it's just so complex. There's a lot of startups just never get off the ground. They don't have maybe the costs to hire the right lawyers or whatever to even get going, or maybe to pay the fees. And maybe these guys would have actually done a really good job and built a really amazing company had they been able to, but the friction was too high for them to actually do that thing. Okay, so regulation on one front, just like literally through fees and all this other stuff, creates inflation. But on the other front, because of all the friction it creates, it also creates inflation by reducing competition. So regulation is super inflationary. Now, the opposite of that, deregulation, is super disinflationary. Okay, so when you massively deregulate, you massively reduce inflation. And we know through DOGE, Department of Government Efficiency, and a lot of Trump's talking points on his tour, on his presidential run or whatever, we know that's a top priority of Trump's administration is to massively reduce regulatory burden in the United States, to cut costs, to cut all this nonsense in the government and just kind of like gut it all out, okay? And if we get that, and early signs are that we are getting this, if we get that in size, that is going to be massively disinflationary, okay? So there's one way you're kind of tackling inflation, okay? Another way that they're planning on tackling inflation has to do with energy, okay? You might have heard this term that Trump likes to say, and it goes like this: drill, baby, drill. Drill, baby, drill is Trump's way of saying that he wants to massively produce up the production of oil domestically in the United States. And if you massively up the production of oil domestically in the United States, you are going to decrease the cost of energy. You are going to decrease the cost of gas. And when gas is super cheap, energy is super cheap, guess what? That makes everything else super cheap, because if you want to ship some vegetables from the West Coast to the East Coast, that costs gas. And whatever that gas price is gets filtered into the total price of those vegetables when they eventually get sold on in the store. And same thing with energy. Energy and gas is like pretty much permeates every level of our society. And so if you can massively cut energy costs in the U.S., you can massively disinflate. And so one way they're wanting to do that, again, is with drill, baby, drill. And the other way they want to do that, and this is a Scott Bessent thing, is, I don't know if it's originally from him, but I heard this a lot in some of the pods he was talking in, is they want to massively up the amount of energy build out as far as nuclear energy within the United States. And we haven't been doing this for the past couple decades. If you actually look at a chart, so I have this chart from Balaji of the U.S. energy production versus China, you can see it's out of control. That around 2006, 2007, China just massively surpassed the United States in terms of electricity generation, and we are just like hugely falling behind. And this is actually a national security issue, because when it comes to energy production, that has to do with everything, right? Like AI, military capabilities, robotics, manufacturing, the economy, literally everything relates down to energy generation. If you can make really abundant, cheap energy for your country, you get a lot of productivity, and you get a really big boom when it comes to robotics, things like robotics, drones, AI, etc. And when you have a lack of that, it makes all those things way more expensive. And the United States is just really lagging behind. So Scott Bessent, the Trump administration, what they really want to do is they want to massively increase the amount of nuclear production we have in the United States. And that comes through, in part, deregulation, obviously not like total deregulation. They're not psychopaths, but the idea of like reducing the amount of insane red tape when it comes to actually building nuclear power plants. If you've listened to, the All In Pod, they always talk about how, nuclear energy today is a lot safer than it was 20 years ago. A lot when we've had these like nuclear reactor meltdowns. The technology today is actually meltdown proof. So you don't have the same issues when it comes to, this like a nuclear fallout and all that kind of stuff. They're extremely safe. They're a completely different build out, and they're a lot more efficient. Okay. And so if we could massively increase the amount of nuclear build out we have in the US, we could get cheap, abundant energy. And obviously that takes a little bit of time. I'm not saying it doesn't, but again, that's super disinflationary. And I think we could get a scenario where the Fed sees this happening and they stop worrying about inflation. Because the reality is, like, if you massively increase energy production and you massively deregulate, that's enough to quell inflation. In fact, that's going to be far more effective than the Fed raising rates. Far more effective, because in a fiscally dominant environment, the Fed raising rates actually has very little effect on quelling inflation, or at least not nearly what it used to. So right now, that's kind of like the Trump administration's plan, right? It's not their full plan, but Trump is actively calling and saying, hey, I want lower rates. I want lower rates. He likes the stock market going up. He likes crypto going up. He likes the economy doing good. He wants lower rates. He wants abundant energy. He wants massive deregulation. If you actually put all these things together, you actually get a really good outcome. Now, couple this with, I think, the cherry on top, which is if you take rates down to 0%, you actually reduce rates all the way down to zero, and you have all these things like inflation's under control, abundant energy, all this kind of stuff, right? It's actually really good fiscally because it reduces one of the biggest expenses for the deficit, right? Which is our interest payments, which I don't know where they're at currently, but at one point they were bigger than everything we were spending on defense, right? Like our entire defense budget. Interest payments had eclipsed that. They'd surpassed that. So we were actually paying more on interest than we were on defense. Like, we pay so much money when it comes to our interest payments. It's absurd. And if we could cut that down to 0%, we would save so much money on our deficit, which obviously spending less as a government is one of the priorities of Trump. So again, this is another reason I think you're going to see Trump really pushing it this way. You're going to see the new Secretary of Treasury, Scott Bessent, really pushing things this way. And I think they have a lot of power when it comes to this. The Fed is technically independent, but it's also kind of not in some ways. It is also tied into the government in some ways. And the government definitely has a lot of sway when it comes to that. So I think eventually we do get these rate cuts, and I think we're going to get a lot more than the two expected. Next up, I'm going to share a tweet, and it's CZ saying, imagine being the last government to buy. And then it's a tweet from the DeFi investor talking about the Czech National Bank governor, and now he has a plan to present. He's presenting a plan to buy Bitcoin tomorrow. The plan is to buy up to 7 billion Bitcoin. And then it says the race to accumulate as much Bitcoin as possible has begun. And then on top of that, you have, where is it at? Somewhere in here. You have this tweet from Ted showing the nonstop dip buying by the president of the United States. Trump, the president of the United States, has been nonstop buying the dip. And he also just announced today that his media company is going to be investing and buying crypto as well. So you have the most powerful man on the face of the planet buying crypto. You have the most powerful government on the face of the planet saying that they're getting ready to create this digital asset stockpile and buy crypto. And then you have all these countries putting together these presentations on why they should buy crypto. You have multiple states submitting bills to create their own Bitcoin or digital asset strategic reserves. And the game is afoot. The race is on, okay? Because it doesn't matter if you like crypto or you hate crypto or what. If you think the biggest government on the face of the planet is going to have a strategic reserve, even if they don't buy it, it's really easy to come to the conclusion that other countries, companies, 401ks, et cetera, are going to also add Bitcoin to their balance sheet in some way, that Bitcoin is going a lot higher, and that you as a country should probably try to do this before those other countries and companies and corporations, et cetera, so that you can experience that upside. Countries also get FOMO. They don't want to be left behind. They don't want to be the last one to the table. Whatever the U.S. kind of does, the world likes to follow. And so the race is on, and this is insanely bullish for crypto prices because we're going to have entire nation states buying crypto to put on their balance sheet, and it's so much more. Again, this is really brings a lot of validity to the space. It brings a lot of social acceptance to the space, which we didn't have a year ago. A year ago was for drug dealers terrorists and just the worst people on the planet. Today, it's for the president, the most powerful man on the planet is buying the dip. We have had a massive vibe shift, a massive shift culturally in like the acceptance of crypto. And this is only going to accelerate with time. This is just the beginning of this happening. You know, it just makes a lot of sense for these countries and, you know, companies, 401ks to have some sort of Bitcoin exposure. It has been the asset of the last decade. It is massively outperformed everything else. There's an argument to say that most things are just moving up in line with inflation and hardly performing at all. So again, it makes a lot of sense, and I think we're going to see a lot more of this. All right, and really quick, I want to play this video of Trump talking about abolishing income tax, and then we'll talk about what it means. But really quick, I just want to play this video.
America is going to be very rich again, and it's going to happen very quickly. It's time for the United States to return to the system that made us richer and more powerful than ever before. You know, the United States in 1870 to 1913, all tariffs, and that was the richest period in the history of the United States, relatively speaking. In other words, relatively. And they set up the Great Tariff Commission of 1887. And this commission had one function: what to do with all the money that we took in. It was so enormous that they had no idea. It was a blue ribbon committee, was set up 1887, and what to do with all of the money that we had. And again, Teddy Roosevelt was a beneficiary, because when McKinley was killed, he took over this vast sum of money, and he did all of those national parks and all of the other things. And I'm not knocking him, but he was given a vast amount of money. And that was all made through tariffs. We had no income tax. The income tax came in 1913. As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens. Does that make sense, right?
Okay, let's break this down, because it's actually really insane. Trump has proposed multiple times abolishing income tax for the U.S., basically stating and pointing out the fact that we didn't have income tax until 1913. Before that, we had tariffs, and that's how the U.S. government made most of their money. And then also pointing out the fact that the government wastes a massive amount of money. We do not need to be spending near the amount we are. And when you cut income taxes, you also allow a lot of innovation, a lot of building to happen in the U.S., right? That's basically a liquidity injection into the people, into the markets. It brings in more companies, it brings in more builders, and all of that spurs economic activity and overall makes the United States a healthier financial environment. So, you know, I don't know if you'll be able to pull that off. That is a pretty crazy thing to abolish income tax. But if he were able to pull that off, that would be just massive, a massive liquidity injection for the markets. And we would see crypto and literally everything else just go so much higher. That would be absolutely unhinged bullish if we were to see that happen. But even if we don't see maybe a tax cut, you know, sometimes Trump will like kind of do extreme anchoring where he'll say this really extreme thing when really he wants something that's maybe a little bit less extreme. So maybe he's asking to abolish taxes and trying to see if he could pull that off. But maybe if not, we just get a massive reduction in taxes, right? Which also would be insanely bullish. Okay, lastly, let's go into my bull case for liquidity this year. I've mentioned a couple of the different things. So the first thing we're talking about the Fed, and we have deregulation, we have energy production, and how it would make sense to cut rates down to zero. So that's one kind of scenario, maybe bullish thing for liquidity. Second thing is Trump tax cuts, or maybe the possible way out there, maybe slim chance of eliminating income tax. That'd be insane. That's also very bullish for liquidity. Another thing, maybe that's a little bit less about global liquidity and maybe more crypto specific, is the idea of capital formation. So the whole reason the SEC was originally created, and they kind of created rules around securities, had to do with this idea of capital formation. Basically, when there's a ton of grifting going on and there's a ton of like scams going on in the stock market, etc., it makes people hesitant to want to invest. They want to feel safe and like they're not going to get scammed. And you get the same experience in crypto, where a lot of people are hesitant to invest in crypto because of all the scamming and grifting that happens in the space. And so the idea originally behind the SEC was like, okay, let's make these minimum rules that make it so that we reduce a massive amount of the scamming and grifting, so that we could have so we can have abundant capital formation, so people feel really confident investing into the stock market. And I think we're finally at a place where we're gonna see that hopefully with good regulation in the crypto space, where maybe we can eliminate a lot of this scamming and grifting within the crypto space, which will bring in abundant amounts of liquidity because people will feel safer investing in crypto because it'll have that stamp of approval. It'll have just kind of like maybe not all of crypto, maybe like there'll be like a wider crypto space. There'll be a little bit more wild west because you can't really stop crypto. But maybe there'll be like some form of crypto securities that are really easy for anyone to launch. They're still awesome. But maybe they have like, let's not even say crypto securities. Just imagine if there was like a category of crypto assets that had like these minimum fundamentals that you knew that you weren't going to get rugged, you knew you weren't going to get scammed, and you knew it wasn't just a complete grift, right? Okay, so just like somehow you had the right regulations to make it like that, right? Imagine there's a category of crypto like that. And imagine how much capital would flow into that category, just knowing that these were going to be long-term things that were around for a long time. Maybe there's rules about how they release tokens and et cetera to kind of make it more of a long-term mindset, so these people aren't just cashing out, right off the bat. I think if we had that, we'd see abundant capital formation in that area. And if we made it easy for DEXs to list it, Coinbase, and it shouldn't take millions and millions of dollars to IPO, in this country. And early stage investing shouldn't be limited to VCs. So we got to make sure that doesn't happen. But you get the basic idea that clear regulations will actually lead to more liquidity and capital formation within crypto. On top of that, when you have deregulation across the board and kind of just removing some of this or de-risking some of the fear of like maybe going to court or going to prison if you're getting involved in crypto, which was kind of the threat over the last couple of years under the Biden administration. Now that you're de-risking that, you're having a lot more teams and developers come into crypto, start building products and more innovation, more competition, all that kind of stuff we talked about earlier. With that is going to be easier onboarding. You're going to have less scams. You're going to have reduced friction, and that is going to bring in more liquidity into the crypto space. You have every major financial institution on the face of the planet getting involved in crypto right now, which is absolutely insane. Financial institutions like to sell products. They're no different than any other business. They like to find new shiny products, they wrap them up, and they sell them to their customers. Crypto represents the greatest category of new products they've ever seen in their lifetime, okay? This is just this untapped wealth of money that they could make. They're seeing all these fees that Binance, Tether, all these companies are making. And they're saying, you know what? I want a piece of that action. I want some of that action. And so you're going to see all these traditional TradFi institutions with trillions of dollars under management heavily promoting crypto, heavily pushing crypto products. You already have Larry Fink literally going like every other week. It feels like he goes on some talk show and talks about how tokenization is the future, and everything's going on chain, and this is the future of all wealth and all that kind of stuff. And so I think you're going to see a continuation of that. You're going to see a lot of marketing out of these firms, and that's going to be crypto specific, a huge wealth of liquidity that's going to get tapped into. I'll also highlight that when it comes to every asset category on the planet, like the majority of owners of those assets is institutional players. So stocks, whatever, those are majority owned by institutional investors. The exception is crypto. By and far, they own very, very little crypto when compared to retail. And I believe that is going to flip. And you're going to see a lot of capital pour into crypto from institutional players who are going to want to get allocated into the space. I think because of the social dynamic around crypto like changing, and I think because of the regulatory risk that has now gone away, we're really on the cusp of seeing that happen on a scale we've never seen before. You have QT, quantitative tightening, coming to an end this year, and the possibility of seeing QE at some point in this year. I know if Trump had his way, we would be seeing that. And there's quite a few scenarios. I've listened to a lot of macro podcasts. That has become my thing lately, where I listen to a ton of macro podcasts. And there's quite a few scenarios that I've heard spelled out as to why we could go into QE. I'm not going to spell them all out right now. But there are paths forward where we end up doing, some level of QE within the U.S., and that's a massive liquidity injection if we see that happen. This one's actually a huge one, and one I don't hear talked about a lot, and that's the strength of the dollar and how that kind of relates to like global liquidity. Right now, we have a really strong dollar, and that is really bad for global liquidity. Pretty much everyone hates having a strong dollar. Not everyone, but like pretty much everyone. Like Trump wants a weak dollar, okay? China wants a weak dollar because they want to do a bunch of stimulus because they're going through this whole financial crisis, but they can't do all the stimulus they want to do when we have such a strong dollar within the U.S. The UK, Europe, like manufacturing in the U.S., like they all want a weak dollar, okay? And so, and under Trump's last term as president, we saw the dollar strength massively reduce. And this might sound counterintuitive because, usually being strong is like a better thing. But having a weak dollar is something Trump wants, something I want, something you want, because that means you have a lot more liquidity flowing into things like the market. And when the dollar's strong, it sucks out a lot of liquidity from the system into itself, right? And we don't want all that liquidity sitting in the dollar. We want it sitting in the market, in the crypto market specifically, so that everything is going up. But my point is, Trump already wants a weak dollar. China really wants a weak dollar, and I think there's going to be some bargaining happening between Trump and China and Europe. I think Trump is waiting for the right deal, and he's trying to line up that deal. But I mean, he already wants it. It's not going to take a lot. So I think we're going to see a weaker dollar in 2025 going into 2026. And I think that's going to be really beneficial for liquidity and the markets. All right, and that's everything. Obviously, none of this is investment advice. None of this is me telling you to buy crypto or anything like that. This is just me giving you my thoughts each week on what's going on in crypto, what I'm thinking about it, where I think it's going next, all of that. You should always do your own research, and I will see you next week.